Welcome back to my channel. If you're new, please consider subscribing. Today we're going to be going over some of the news that has affected the stock market. We're going to begin with the governor speaking about reopening the economy slowly, little by little, bringing down the infection rates. The governor stated that bringing people back out into the public too fast can bring the infection rates back up quickly. He also spoke about keeping people indoors is not sustainable because businesses remain closed. And of course, a lot of the employees that work in those businesses are indoors. So of course, the businesses can't be opened. The governor made a good point also that this is an opportunity to grow and learn and improve on things. Because of course this is the first time we've ever been through this, so everyone's learning. Okay, so let's begin with American Airlines, AAL. We're going to analyze that stock. Let's see what's been happening with this stock. Let's begin with March 27th. The stock was falling, and as you can see, there were dominant red candles, and the dominant red candles means that the bears were dominant, and very few green candles. So the stock, of course, was moving down. Let me just get the arrow. Okay, here we go. Everything was going down. So on March the 27th, the market opened bearish with a red candle. It continued to go down for the remainder of the day. Then the next day it gapped down, red candle, to 1313. And again, it continued to go down for the remainder of the day. Okay, then on the 30th, the market gapped up, but then it remained going down, and it closed with a small green candle at 1222. The next day, the market gapped down, 1137, continued going down, ended with a small green candle. And as you notice, not every, but most candles are very close to the simple moving average, the 9 simple moving average, which usually means, and I've observed that it usually goes down, the market will be going down. The further away you see the green candles are a little bit further away from the SMA, the simple moving average, and that usually means that the market might be going, actually will be going down, but it could also go up a little. So if the market gaps up, it'll gap up with a red candle and then continue to go down. Okay. Then we're going to move into the last week, week coming into this week. And then basically just range. It really didn't go up much, really didn't go down much, but it just kind of like stayed in a range. Let me see. Didn't really move much. But it did go down today, the 22nd. It did go down from 1110 to 1031. All right, so let's look at another stock. Let's look at, let's see what we have here. Ford Motor Company. Now, what I see from these last few days, we have like a triangle shape. Let me get rid of this arrow here. Let's get rid of that. And if you can see, I'll show you. Well, let's change this to a bar. Comes down this way. And then we have another, let's connect another bar this way. And it's like a wedge shape. So it's open on one side, it's wider on one side, and then it narrows as it gets further, so it's narrow on this side. So that might mean that this stock is going to either gap up or go down. It's going to either break up or break down. One of the two. So it's narrowing, and it usually signifies that it's going to go either one way or another. So that's good to watch out for. The week of March the 25th to April 3rd, it basically did the same thing. It kind of just ranged downward. Let me see, right? There you go. Well, not even range. It also take a little bit of a wedge shape. So let's see if we can move this one over. And it did break out of that. It did go up the other way. Came up this way. So it did break out of there. And again, there was another previous a week before that. Again, the stock range, Ford Motor Company, it did range down, and then it broke out of that. And then it went into another range. Broke out of that. Went into another range. So it seems that, I guess, it almost seems obvious the stock is going to break out again, move out of this little range again, but that remains to be seen because, of course, you know, stocks are going to do what they're going to do. No one really knows what they're going to do, but you use your best estimate, your best guess, and there's a pattern showing already, and that pattern kind of says we're going to break out again. Okay, it could be up, it could be down, we don't know, but it's good to watch this one. Okay, that would be for this week. All right, let's look at Apple. And what I noticed about Apple is there was a red candle on April the 7th. They got really far away from the 9 simple moving average. It's right here. And usually what that means is when a candle gets way up above a moving average or way below a moving average, that normally means that the stock is going to snap back. So it's going to come back down. And it did. It went all the way. It started up at 270.62, and then it came down that very same day back to the simple moving average, 259.74. So when you see something like that, the candle usually comes back down. Let's see. What else did I see here? All right, again, you see down here, got the red candle, came all the way down to 214.91. And the simple moving average is right here. So as you see how far, relative to every other candle that's near, you see how far it came down. So that normally means it's going to snap back close to the moving average, and it did. Okay, so it went all the way up to 239, 240.36, and then it continued going up for the rest of that day. This was on March the 24th. Then it just continued. Okay. Let's see what else we have. Again, here's another one. Reached all the way up to 303.43. And then it came back down to the simple moving average. So here we go. Went up there, came back down here. Again, green candle. Came far away from the moving average. Okay, and then it moved back and further in, kept going up. So if you would have followed this move, that would have been, let's see, 257, 43, 44, 45 points average, approximately. 45 points profit. That would have been a very good move. Okay, and then over here it just ranged down. And again, the closer it is to the simple moving average, the more it's going to go down. All right. Okay, normally if it's this far away from the moving average, it's going to be going back up. But if it's this close, it's going down. It's this close to the moving average, it's going down. This close, it's coming down. This close, it's coming down. All right, let's look at one more stock. Okay, let's see. I'm not sure if I have it on my list. Do I? No. Okay. All right. Microsoft Corp. And again, these candles far away from the simple moving average, they go back up. And I mean, you can take your profits the second day or the first day you make a profit, or you can continue following and have an even greater profits. And this one went for 1, 2, 3, 4, 5 days. All right, let's see what else. Okay. All right. Over here, the stock started to fall. It fell from 176.51 to 166.93. Okay. All right. See if we find any other candles that right here that came far. This one went far. Right, this one moved far away from this SMA. This one moved far away. This one moved far. This one. Okay, let's get rid of this. This one moved far. One back up. See if we find any more. All right, so we're going to end here. Please like, comment, share this video with everyone you know. Let everyone know what we're doing here at LR Options. If you haven't done so already, please consider subscribing. We'll see you next time. Bye-bye.